And good morning. It is 7:15 on Thursday, September the 5th, and we are here in our daily market analysis. We skipped yesterday, so let's go ahead and just really take a look at the last 2 days. We'll start here in the spiders. Okay. So first thing I want to note, let's back up just a little bit here. So we are here in our spiders, okay? What we've noticed is we've been noticing this bear flag, okay? So we have our flagpole, we have our flag, clearly a bear flag, both due to the way that the flag is shaped as well as the direction of the pole. Okay. So a lot of folks would anticipate that this would break down, right? That's typically what a bear flag does. As you can see right here, we're at 296.55 to 296.60 this morning. And so let me pause and get that article up real quick as to why the market's jumping. All right, so as you can see here, China and U.S. agreed to meet in October for trade negotiations, the Chinese Ministry of Commerce. So what this basically is showing is that, another level of potential trade negotiations are on their way. My initial question is, how is this any different than anything that we've seen recently? I don't know that it is. It seems that every time we start to get into a potential concern, right, we get a tweet or a little piece of news. And it's just it's tough to really figure out, except it really is almost becoming predictable at this point. And so what I ended up reading yesterday is that a phone call was confirmed by the U.S. Trade negotiations of the meeting had not been. That might have changed this morning. I haven't necessarily seen whether or not that changed, which you can read through. It's all over the news, and this is the reason that the market is jumping up. Let's pull up Thinkorswim again. Okay, and so what we're going to see is we are going to see this 296.50-ish right there. So we're going to be right in this area, which means a couple of things. You'll notice that I have some gaps already. So we've got a gap down here at 288. And the way that I tend to treat gaps is real body gaps, right? Real body, I think candles are okay, or the candle wicks are okay. I really like to see real body closes on these gaps. We almost got this one down here, but we have a real body gap right here. We have a real body gap. Really, this should be down here. We're gonna have another real body gap right here at 294.04. Okay, so we're getting some major gaps. In 3 days, we'll have gone from 289 to 296. We're looking at a what is that? That's 7 points, 3.5-ish% in 3 days. We tend to know that because of the unique nature of SPY, over a 5-day trading period, we typically don't see more than a 2% jump. All that regularly without some level of retracement. And so, I'm certainly thinking about, you can see one of my diagonals I'm trying to get into. I'm going to probably put in another diagonal here at 300 right at the open, right? I want to get in right at the open because I think that that's going to be a solid trade. We've seen, interestingly, though, and I want to point this up, right, we got back in this box here, which is typically bullish for me on securities, right? Really, for the entire month, we go 8-1. Right here is when we close outside of our bullish box. And then we've really been flirting. We had a couple of days in the middle of the month in the box, but then we closed in there. Let's go to our futures market watch. Okay, so here are our futures. We see futures up big, 0.8 of a percentage point. VIX is down 2%. So not necessarily as VIX futures are down to 2.35%. Not necessarily as much as I would have anticipated VIX futures being down with such major news. So what could this be? Could be a little bit of a short squeeze on this breakout, as folks were seeing the exact same thing, right? This bear flag, and so short. So this could end up being a little bit of a short squeeze on us today. It could be a short squeeze for a couple of weeks or a couple of days, excuse me. Right, we're going to see the exact same thing on pretty much every chart. Interestingly, the IWM, which has been our leading indicator, is under some of this resistance, and so I think it's important to keep that on watch. The diamonds certainly gapping up into this 266 area, above resistance, above 50-day simple moving average. We're going to be above 50-day simple moving average as well here in the spiders. Closed above it just barely yesterday. Certainly going to be over it in the Qs as well. Okay, so really what I'm going to look here at now, especially on the spiders, you can already see that I've changed the color on this line from resistance to support. I already did that, so we're going to be looking for this 294.04 area, 294, kind of on the dot to hold. I'm going to go ahead and add a gapping indicator or a gapping line right here. And so we'll be in this, just kind of seeing what happens. Are we going to break out up here? Or are we going to have a false breakout over 294 and then retrace back? Not sure. That's what I'm going to be watching for over the next couple of days. Certainly gonna play some diagonals, see if I can't get filled on some diagonals, and really just kind of see what the market's going to give us. A lot of opportunity. It's been tough trading, but still a lot of opportunity if you played it right and played it well. And so yeah, let's get to it.